Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, December 29th. Two more days of the year. We've got the 30th, Wednesday the 30th, and then Thursday, right? And then we've got another shortened week, which another 3-day week, which is kind of nice, right? Again, I talked about this over the weekend, but I typically really like the breaks in trading. If you are kind of in this for, if trading is your full-time gig, then I think it kind of helps to get a little bit of a break away from the screens. It really, for me, just kind of just adds perspective, right? I know that, so I always see, like, it's funny when we do have a day off. Like, I see a lot of traders. Some of them are upset because the market's closed that day. But really, if you're doing this for serious for seriousness and for something where it's your full-time job to make money in the market, or to try to make money in the market, one day and to have a little bit of time off, really, I'll use that word again, perspective, kind of gives you that relief, and kind of hones in maybe on your strategy from time to time. I think as traders, investors, sometimes we kind of get a little bit off the tracks of what we're trying to accomplish. Sometimes we get a little bit relaxed in discipline. I think what happens too with this market that we've had in the last, well, the last few months, many months, I guess, with the way that this market has been, one of the things that happens is sometimes traders, myself included in this bunch, sometimes we begin to like form bad habits because the market is doing things that it doesn't typically do. One of the things that I've even had, like in my spreadsheet over here, is that if you make mistakes in this market, you could kind of get away with a lot of them right now because the buy the dip mentality. The dips have been very shallow for the most part, and I mean it has been a bit of, it's never easy. I hate when people say, oh well, the easy money has been made or whatever. It's never easy, but I think that there's been a lot of what I like to refer to as get out of free jail cards that have been issued, right? If you make mistakes, if you have too many positions on, too much risk, this market will bail you out, or has, for the last few months kind of bailed you out of any mistakes. So that said, the breaks really are helpful to kind of get back on track if you've had those situations before. So one quick announcement: tomorrow we are doing a member webinar, which will be, I'm thrilled to do. This will be with, as I mentioned in yesterday's video, with a couple of TTG members, and we're going over some best practices, kind of summing up 2020, and then looking forward to 2021 and what we want to accomplish, and what we think are going to be some of the major themes for next year, and how we're going to capitalize on that too. So I'm super excited for 2021. I think a lot of people, for various reasons, want to get 2020 over with, but from a trading standpoint, I think it's nice to wipe the slate clean, right, and starts fresh, regardless of how you've done. If you've done very well, if you've wish you've done better, well, you start all over, 2021. All right. So let's get into today's price action. So themes of the day: small caps, high growth, momentum, a bit of a breather. Right, some of these areas of the market got hit pretty hard today. I would say, what we talked about in yesterday's video. If you're a regular viewer of my videos, I mean, listen, maybe I'm giving myself a little bit of a pat on the back, but we talked about last week how I was reducing risk. Again, not everything, but just, was quite sensible with taking off some positions. And then yesterday, talked about a few warning signals too, which I'll kind of rehash a little bit in today's video. But, I went on for about 30 minutes yesterday, which is longer than usual, and really kind of just went through some details about the rotation that we're seeing on the tape, and about how I thought things could come in a little bit more, right? We've been talking a lot about like the ARK ETFs, ARKK, as well as ARKG. It's kind of interesting. I was watching CNBC today, and one of the commentators was talking about how there's been a lot of SPY puts recently. That kind of stuff. We all have different opinions, and different opinions are good because that's what makes up a market. But for me, we see SPY puts every day. Every day there's SPY puts that goes up, right? So it's really difficult to get a signal that you're going to use unless you really see a lot of repeat activity, or in the Qs and IWM. We've really been seeing that, right? We've also, over the last week or two, I've been seeing a little bit of an uptick in IWM puts and SPY puts, but that's been going on for weeks. So I really didn't see anything. There were some spreads that went up yesterday in SPY puts, but what I look for is something a little bit different, because again, you can make the case every day we see SPY puts on the tape, aggressive. It's just there's so much SPY that trades on a given day. It's tough to find an edge from that, in my opinion. What I try to look for is something different. One of the things that we talked about last week in the trading room is we saw a heck of a lot of ARKK, so the ARK Innovation ETF. We saw a huge amount, and I think I added up the notional. It was like $7 million of puts being bought in February. And so that is something different. I don't know if I've ever seen puts like that in that particular ETF. So something like that to me jumps off the page, and that's something that we discussed in detail in the room last week. I talked about a number of things. I said, hey, well, if you don't want to buy SPY, not SPY puts, if you don't want to buy the puts in ARK, just realize that how much the ARK ETFs have gone up, and it would make sense that they catch a breather, right? So I don't know, I think a couple people in the trading room took some of those ARK puts that we saw in February, but they can also be like a proxy for you to say, hey, maybe you want to lighten up a little bit, right, in some of the things that you're doing. So just to kind of rehash what we saw over the last week, we're going to see SPY puts every day. We've also seen some UVXY calls too, right? But we see them sometimes over and over and over, and they don't work. So it's very difficult to say, okay, this is the day that the SPY puts are going to work, right? But if we see something like a colossal position in ARK-K, the innovation ETF puts, which we saw last week on multiple days, to me, that's a little bit different, right? And I think that was a pretty good proxy for a possible pullback, which is what we saw today. And if you look at these things today, remember what I talked about in yesterday's video is that things that go up exponential and have a hockey stick pattern, right? You know what a hockey stick looks like, right? Very, very long handle, which is what we saw in a lot of these momentum areas. So it doesn't surprise me, maybe the magnitude, but ARKG down 7%. That's a lot for an ETF, right? For a group of stocks. ARK Innovation down 4.2%. And there were some more puts that went up today in the ARK Innovation ETF for January. I don't know if they were sold because they were a bit out of the money. So, that to me is a little bit less smart when a move already takes place and somebody's buying puts then, because it's kind of like the oh no puts, right? Rather than the savvy puts last week, somebody saying, hey, this thing has run up too much and it's due for a pullback. And note, about the timing of those ARK puts that we saw. Right, and if we go into our Slack account, right, or the trading room, right, I'll show you the exact puts that we talked about. And again, we talked about these multiple times last week, but $2 million. Notice that they went out to February. Why do you think they went out to February rather than January? Because they probably didn't know when the pullback was going to come. My guess, I don't know. I don't know who the buyer was of these things, but they gave it plenty of time and just said, hey, this group of stocks has been just straight up into the right. So they were due for a pullback. Right? Look at this. Look, this. Oh, this was a put order, but yeah. So they came in a couple times on this stuff. So anyway, let's move on from that. By the way, one of the things that, when I refer to a lot of my strategy and talking about, last week lightening up positions, keep in mind, like I know that there's a lot of different type of traders, investors who watch these videos. This is basically how I trade, right? I've got a trading account. I spend, the majority of my day trading in my trading account. And then of course I have two other portfolios too that I run. I run the TTG trend portfolio that we rebalance, once every couple of weeks, maybe once every few weeks, depending if I like what's going on. We rebalanced this a couple weeks ago, probably due for another rebalance either this week or next week. And that is, following the trend. So that's it, right? I don't really touch that unless, something, a one-off happens and I've got to remove a name, either on the upside or on the downside. Then we also do the TTG watch list trade as well, where every weekend I put together a watch list. I buy that watch list Monday morning, hold it through the week, sell it, go into SPY for the weekend, and then go back into the new watch list that I come up with. So those are the three different ways. But for the most part, I'm a trader, right? I'm also an investor. I would classify this more as investing, but so my time frame is I'm trading, right? I'm doing some day trading, but I'm doing a lot of swing trading, right? Which is kind of shorter term type stuff. All right, so I just wanted to mention that if you're new to watching my videos, what my time frame is. I know it's a big thing, right? Everybody has a different time frame, right? It's very personal to your trading style and so forth. All right, so a couple things that I wanted to really kind of cover besides what happened in this group, right? Also, it wasn't just the ARK funds that went down, but they did get hit very hard. Also all the clean energy stuff, right? Solar, clean energy down over 3%. Again, all this stuff, needed a breather. Biotech is another group that's been straight up, right? So, we could look at a couple of these charts. They're going to look at, it's funny, taking a look at this pattern in front of you, the XBI equally weighted ETF, right? So a lot of small cap in this ETF. But how many charts look like this, right? How many growth charts look like this? Big rip, right, out of the sideways area that this was in, a nice run up, and now we've got a pullback. You're going to find this chart pattern so frequently. We went through at 1 o'clock today. We went through charts today. We had a nice chart session. I also went over open positions because I think it's good to do that when not just the market is going up, but when the market is going down or momentum names are going down, because SPY finished down just barely for the day, just down 20 basis points. The Q's finished green by the day. So it really is, was this kind of stuff, right? In terms of, how you did for the day and what your P&L is. First of all, it should be taken in a bigger picture, not just one day. But specifically for today, if you're in a couple different areas and not just all in high growth, you probably did a little bit better today, right? If you have all your eggs in one basket, right, today could be a little bit more painful for you. But if you're spread out a little bit and realize that there was bound to be a rotation into some other areas because of what super high growth momentum stocks have done, then you probably fared a little bit better today, right? Just a little bit of I don't want to say common sense, but I think it comes a little bit with a trading feel, is that you kind of learn to balance yourself out, right? If you've been in some of these groups of stocks, as a trader, one of the things that you probably have learned over time is that these things, whatever the group is, doesn't just go straight up, right? What normally happens is, a group accelerates to the upside. Hopefully, and what we try to do is capitalize on that trend very early on. But eventually there will be profit taking, and then people take those profits and they put them into some other areas of the market, right? Simple rotation. It happens over and over and over. No group of stocks just goes straight up. What we've seen over the last few weeks is abnormal for, the hockey stick patterns and the length of the hockey stick. But that at some point there's going to be rotations. And then what happens, right? After things rotate out, people then begin to kind of sift through some of those names that have pulled back and find opportunities, right? It's a constant seesaw, right? So, right, and clearly, names that we talked about yesterday, this Amazon was a huge winner for me. We talked about in yesterday's video staying with a trade, right? Once you get a signal in a trade, you try to stay in it for as long as you can. I could be wrong here, and Amazon could do a little bit of back and filling after a nice, 2 days of gains. But where I think Amazon could get to, remember this 3446 level. This is what we talked about in yesterday's video too, right? So that's what I'm going to try to shoot for. Now, we may not get there, and the signal may cancel itself out, and then we'll have to change. But for now, that's what I'm targeting, right? And my plan to do this, to target this 3446, is to keep rolling trades, right? So for example, we're in. I was in this week's call spread 32.15, 32.30. I took that off for $13, put that on yesterday for $5.90. What did I do? I rolled it into a next week call spread for $6.60. So keeping some skin in the game for as long as it will work, right? I want to keep those chips on the table for as long as the signal is active. If the signal is no longer active, then I take the chips off the table, or I may have a loss on the last roll of the trade. But this is the third time, right, that I rolled this. I also put on a spread yesterday, and I took that one off, right? 3255, 3265. That also expires this week. So you have to be a little bit strategic with these things that have a very short life to them, right? Expires on Thursday, not even on Friday, right? Because we have a day off. So, I took this off, right, for a nice gain, 650, paid $4, and then now my new spread, right, and I rolled it out a little bit further, so it's not so, super short term, right? So we'll keep doing that trade over and over and over for as long as Amazon, until it gets to my target, or unless something changes, right? So the odds are normally how this works. I don't want to say normally, but if it works your way, right, you can make money on anywhere from, 2 to 5 trades that you've rolled, and maybe you'll lose money on the last roll, right? But because you've continued to kind of do this transaction, it could be very profitable for you as long as you're sticking with the trend. All right, so that covers that, right? And that was a nice one. Now, of course, some other things to kind of talk about, right? Which is what we've kind of seen with this momentum, rotation, a little bit of baby rotation out of high momentum. Is it just a garden variety dip, or is it going to kind of lead to a bigger correction? Or again, is this just a little bit of a healthy rotation that's going on, right? Now, I don't have the answer to that question. So, I know that some people will just buy the dip, right? They don't care. They don't want to do any analysis. They're just, it's worked before, I'll do it again, right? Every time the market dips, buy, right? That could, that has worked, right? And that's why I've talked about in the beginning of this video that if you've had that philosophy, right, and more of an undisciplined approach, it has still worked because of the way that this market has been. So that could very well be. I've been a trader for a long time now, I would rather do some analysis and try to figure it out a little bit rather than just buy the dip because, some stocks are down. So what's my thought process in this? Well, I'll give you an example. Right. So, and then we'll talk about some indicators too. So PayPal, right? PayPal is a name that I love to buy on dips. However, it doesn't look like it's finished going. It may not have finished going down yet, right? So it depends what your time frame is, but there's a VPOC down here, Virgin Point of Control, that could need to be taken out, right? That's at 228. So what did I do today, right? Well, I took advantage of the stock being down from 242. Or 246 now to 231. I bought a little bit today, right? So I'm scaling in for a swing trade, and I will buy more if we get down to here, right? And if it keeps falling, then I'll have to do something different, right? If we fall back past here, right, then I have to be a little bit more worried. But we've got the 20-day moving average as support, and I'll begin to kind of scale in and then obviously wait for a turn there, right? Now remember, I showed this chart last week in PayPal and in Square, and I said, wouldn't this be nice if PayPal kind of comes into here, right? So that's where I'm thinking. Like if PayPal gets down to, say, all the way down to like 218, right? Well, I'll have started a position here. I'll probably add a little bit more in the 220s, and then maybe a third add someplace in here, right? So that's kind of thinking it out a little bit. And again, PayPal, I feel a little bit more comfortable because I know the stock, and I kind of know how it behaves a little bit, and I know that usually dips get bought in PayPal. How much of a dip, we don't know yet. All right. Now, again, a lot of charts are going to look like this. We could go through another 20 charts that are breaking into the 20-day moving average. We could certainly do that. We could go through a couple other ones, but look at like Twilio's another one, like Upwork is another one that I'm watching, right? How many red bars have we seen in this one? 1, 2, 3, 4, 5, right? This is a decent pullback. So that's the other thing to kind of be positive about here is that now, 5 red bars in Upwork and coming into support, you're starting to see as this rotation out of high growth, things are going to be more attractive, right? And if you've done this, if you did what I did last week, which was lighten up on risk, now you're in a pretty good area, right? Instead of playing defense, right? And I gave this analogy earlier, but instead of playing defense backed in your own red zone, because you have too much risk on, now you can kind of, you could start moving the ball forward, right, on offense, right? Maybe start to cross the 50-yard line and start attacking on some of these opportunities. Maybe not attack, but maybe, as I said, scale in, right? Everybody's a little bit different, and it depends on how much your situation. So what are some of the indicators that I'm looking at? Well, you could see on the bottom left, right, breadth is not strong right now. So this is a bit concerning to me. We've seen this now a few days, right? So if we look at the advanced decline line is not going to show us much because it hasn't updated for the day yet, right? But this is not really showing anything. But I've now seen this back off a few days. If you want to look at the McClellan Summation Index, right? Notice that and this is another thing that I've been showing the last few days is that we've got a bearish crossover here, right? And you could look at the other times as we did in yesterday's video, but this straightening itself out, my analogy is when market breadth is negative, the wind is in your face, right? So when you're running and the wind is in your face, it's that much harder. It's not to say that you can't find winners in this tape. It's just the majority of stocks are doing something different. Right, they're starting to kind of move down, versus when the wind is at your back, right? When the trend when you're going with the trend, right? And when you're going with market breadth, when market breadth is strong, right? So again, this is some super short-term stuff, right? Looking at a McClellan oscillator, putting a 10-day moving average on it, but for me, it helps me, right? It helps to kind of tell me what is going on with the market. For now, I would rather be pressing, which we talked about in yesterday's video too. I would rather be pressing when the wind is at my back, right? And right now we know we've got bad breath, we've got bad market breath, right? And we've seen this now for a couple days. All right, so that's some thoughts. What else? There was something else that I wanted to talk about too, which I forget what it was. Oh. Yeah, so a couple names, so things that I'm watching, right? We talked about Amazon already. Visa's another name that is close to a breakout. I think what comes a little bit clearer here is what this looks like on a weekly chart, right? So if you give this a little bit more time, you can see that this Visa looks pretty interesting. It looks like it's trying to break out of this consolidation and punch out maybe to new highs, right? MasterCard, both of these were stocks that we reviewed in the weekend video for members, but MasterCard is pretty similar looking too. This is also trying to punch higher. What about in the EV space, right? this NEO, which has an event, I believe, on January 6th, actually, kind of held that, notice the price. It took a while for this 50-day moving average to kind of catch up with the price. Look where this thing bounced on, right on the 50-day moving average. What I would be watching for tomorrow, so this is one of the names on my list, notice that the price stopped right at the bottom of value for this week. Right, so I would be watching for a break above 46.56. Right, so there's a lot of things like this that are out there, right? And what else? There was a T-Doc, there was a small call buyer in that. But again, like I said, a lot of these stocks, they're going to look somewhat similar. T-Doc has support here at 198 on the 1 hour chart. Oh, sorry, that's wrong. I just let this chart adjust. It's got to get above call it 202, right? Notice how it got rejected here. All right, and this has been tracking along the 50-day moving average. All right, so we'll see if this kind of holds for a bit. One other group of stocks that I've been talking about is the semiconductors, right? I talked about how in yesterday's video I didn't get what I really wanted out of the semiconductors. However, they're still kind of holding a bit. They were down on the day slightly. Some things are a little bit concerning to me. I think this NVIDIA is going to be really interesting. So I'm following this. Either this thing is going to break and it's going to be, maybe a little bit of a proxy for some stocks if this thing starts to break down and we start to see more breakdowns like this. However, it's holding by the skin of its teeth. Sometimes stocks like to, the way that this market has been going, they like to break one way and then sometimes go higher. So I'm watching this to see how this develops. It could also break and move down here too, but it's at a very crucial spot in this one. AMD too, I actually dumped out of a position today. It helps me do that, right? Some people associate that with, oh, he stopped himself out of a trade. He's got no conviction in the stock. For me, it just frees me up. I could get right back into AMD tomorrow. My concern is it's now below the short-term moving averages and that it could fall to 86. Right? I don't really want to sit in a position that's going to fall down to 86. If it happens to get back above into value, which is 91.50, right? I don't mind, going back into it there. But I sold it right in here, right? Where's my stop today in AMD? 90.70, right, is where I got rid of this thing. So a little bit further down, right into here, right, on the chart. So I didn't catch it right on the break. But again, this doesn't look healthy to me for now. This thing could bounce and then it could further go down. So we don't know yet. What I would be watching and where I've got an alert set is to see if this thing can get back into value for the week. Again, a lot of like puzzles to put together on the tape. And that's where I'm going to leave it for this video, is that give it some time. Right? Like I said a couple times in this video, this market has been very easy on people who are not being disciplined in what they're doing, right? Because this market rebounds so quickly. Does it happen this time? Or, do these things spill a little bit further? They could. There's not to say, going back to this question that I've got here, what I tend to watch is for, I kind of stop a little bit and observe. Right? We know that the VIX was strong most of the day, right? No breakdown in the VIX, almost broke down here, at the end of the day, but still was up 6%. So 23. So let this, my plan is to kind of let this play out a little bit. Maybe we get one more day of, 1 or 2 more days of a pullback. I don't know, but I have dry powder so that I can kind of capitalize on that. And if not, I did start a couple of positions today, right? So you get the first green bar there. Let's see what the VVIX looks like. All right, so the word of the video is going to be patience. Let this play out a little bit, right? When we see some volatility, sometimes it does last more than one day. All right, so that's my plan. Let things play out a little bit, scale into some things, and go from there. Have a great night, everybody. See you tomorrow.